Hi, this is Asiamet with the Bulletin Board Heroes here at Vox Markets for Thursday, the 3rd of November. Starting off with the FTSE 100, where it's a bit disappointing. We've done basically what we did in September with that 2-3 day peak through the 50-day moving average and then falling down. So I suppose on that basis, we might have a rather painful move to the downside. So far, though, support around 70.70, which is that mid-channel support line. And we bounced off that so far today. Above that on an end of day close basis, we've got a chance of reviving the recent rally and maybe even getting up to 74.70. Otherwise, initial stop here in terms of support towards the 7,000 level again. But it would be disappointing to see the market back below 7,000, given that that is where we were 22 years ago. So not a great result for blue chip investors. The level to look at, I suppose, just for today is the 50-day moving average around 71.20. If we close back above that, that would be at least a little bit of a win for the bulls. Moving on to the Dow, which also became disappointing this week as well after the great October. Here we've got a situation where there was what's now a bull trap through the old September peak there at 32,500. Also a bull trap through the 200-day moving average. This would also then be a repeat of what we saw in August. So we just pushed through the 200-day line and then rather painful descent. In terms of support, probably the nearest logical support is the area of the 50-day moving average around 31,000, and maybe we'll see that over the next week or two if we can't regain that 200-day line and 32,500 very quickly. If we can, maybe on a weekly close basis, then there is another chance of heading up towards that May resistance line projection at 35,500. But at the moment, after yesterday's decline, that seems rather a long way away. Moving on to Bitcoin, which still has the prize for being the most unvolatile major market, if you can call it a major market. Here we're still sideways above the 50-day moving average. That's around 19,600. And above that, we're hoping that we can retest the last September resistance around 22,300 or so, where I was at 22,500 in fact. Otherwise, below the 50-day line, there's a risk of yet another probe towards 18,000. But giving it the benefit of the doubt at the moment, just on the basis that the RSI is above neutral 50, around 53, and that means that the technical glass is currently half full rather than half empty. Another disappointing market is pound dollar, known to its friends as cable. Here we're also repeating an August bull trap through the 50-day moving average. It was then around 120. It's now around 113. And below that risks yet another test for support around $1.10. Worst case at the moment down to 107, but I think we'll just focus on $1.10 at the moment. Breaking to the upside would involve breaking through 116 and that February resistance line, and then hopefully then taking us back towards the 200-day moving average area at 123, but that obviously seems to be a long way at the moment, long way away. And the pattern of August seems to be the best description of what we're looking at the moment. On to the stocks, and after a long time in the wilderness, it may be that Asiamet is finally ready to deliver a turnaround. We've got bullish divergence, or a bullish divergence line there from back in July. We've broken a line of resistance there from July around 102, and an end of day close above the 1 pence area could get the stock on the road towards 1.5 pence, which is the top of a broadening triangle since July. We are backed by that bullish divergence line, so that's why one can be a little bit more confident of a move to the upside, or a significant one. We also had a very decent bear trap hammer candle on the 31st on Halloween on Monday, and that may also be a signal for the bulls to grab hold of. But above a penny, looking for as much as 1.5 pence, perhaps by the end of the year. So a bit of a punchy call there. Only back below yesterday's low around 0.9, really delaying the upside or potential upside scenario there. On to Blencowe, which has been consolidating at our first target there around 4.75 pence. Yesterday delivered a gap close buy signal, so we gapped down at the end of last month and then closed above the top of that gap, so that is a decent signal. And the overall view here is above 4.5, looking for a new leg to the upside, and that could be as high as the top of that broadening triangle from the, well, this time last year, as high as 7 pence. Again, that could be seen by the end of next month. Going on to a stock which was rather down and out just a few days ago, or a few weeks ago now. Critical metals, I did actually draw a line of resistance there which was broken around the 12.25 pence area, and after a bit of a sideways shuffle we finally had the move higher. What's encouraging now is that we had that big up day earlier in the week, and we've held on to most of that, so more like 2/3 of that up day we've held on to. So that does suggest we've got a bull flag forming. We could then at least retest 14.5 pence, which is the 50-day moving average in the old initial September low, but everything really depending on getting a decent end of day or end of week close above 14.5 to take us back up to 18. And I think that's still 2 pence short of the placing price, but at least that would be a better look than what we have at the moment. On to Eco Atlantic, which is a stock which is starting to improve slowly but surely. The higher lows there, bouncing off the 200-day moving average late last month, and we had a higher low above the 50-day moving average, the rising 50-day moving average, 33 pence. Above 33, looking for the big breakout here and a journey to the top of that rising trend channel from this time last year at 50 pence. And let's see the timing on that. Hopefully as soon as the end of this month, but we could allow for by the end of December. So above 33, looking for 50 on Eco. Good on good stuff this week for Firering, and I was particularly chuffed because the breakout that we had was, I think, appeared in Monday's Bulletin Board Heroes, and that was ahead of the news that we had yesterday on the stock. So we're all very nice. The technicals ahead of the fundamentals on that situation. Got an uptrend line in the RSI window, which probably I should pay more attention to, but the view now is that above the top of that channel, the May channel there, the lower resistance line at 11.5 pence, we're looking for 15 pence, perhaps as soon as the end of this month. Stop loss a bit difficult, but the last resistance on the way down was at 9.65 pence, above 9.65. Looking for up to 15. In fact, you could maybe make that a little bit wider above the 200-day line, looking for 15. 200-day line at 9 pence, looking for 15 pence over the next few weeks. Onto a stock which I'm very happy to see is finally broken out. It's taken a long time. Kefi was threatening to do so. I think it did break the line temporarily earlier in the week on Tuesday, but we've had the proper breakout today. And the top of that channel there from the end of June up to 0.9 pence, and we'd be hoping to hit that easily before the end of this month. Above 0.9 though, that's probably when the fireworks could start, and we could see a bigger and a greater move up to that resistance line there from back in November last year. That resistance line pointing to as high as 1.6 pence, but let's get to 0.9 first. And 0.9 valid while we hold above the 0.6 area. Moving along to a stock which had a decent move last month, a very good move last month. Looks like we're in a mid-move consolidation here, and that was powered by the two unfilled gaps to the upside, very strong signals, and that type of setup appears a lot in the Bulletin Board Heroes. We're looking for 7 pence now while we're above recent support around 4 3/4. So let's see if Lexington can step up to the plate. Stock which hasn't been in the bullish category for quite some time is Pineapple. Here we broke that line of resistance from September around 1 3/4 pence. We're breaking the 50-day line around 2.15, and above the 50-day line on an end-of-day close basis, we could hit the top of that broadening triangle from August as high as 3 3/4 pence, and maybe that will be delivered by the end of this month. Investors' favorite at the moment is Prospex, and here we've had one of the more straight moves to the upside since the beginning of August. But now we've broken a line of resistance from last month around 9.9 pence, and above that we're looking for 15 or even 16 pence by the end of next month. Let's see if Prospex delivers the smooth ride to the upside that it has done generally since the beginning of this year. Stock which looks good again from a charting perspective at the moment is Scancell. An unfilled gap to the upside through the 200-day moving average has been the trigger for the latest move. We actually also had one in September, so a double one, a bear trap gap reversal to start, and then the follow-on gap suggests that this is a very strong situation. And above 18 pence on an end-of-day close basis, we're now looking for 23 pence, perhaps even as a minimum, given how strong that particular floating bull flag, I think you could call it, from last month has been. So looking very encouraging. They're probably the most encouraging stock today in the bulletin board heroes. Moving on to tertiary minerals, where we were hoping that the lows or support would come in at 0.22. In fact, in the end, it was just above the 200-day moving average at 0.18. But the current setup is that while we are above 0.22, we are once again looking for 0.3. And really, after this latest rebound above the 200-day line, 0.3, hopefully the minimum. Previously, we were looking for 0.4, which is basically 2021, late 2021 resistance. So the levels here really 0.22, 0.3, and 0.4 for tertiary. And ideally, we don't need to have another test below 0.2. A couple of stocks ago now. One is one which took a long time to get its act together, but United Oil and Gas hit the target there at the top of that rising trend channel around 2.6 pence. An end of day close above 2.7 should be enough to deliver a fresh new leg to the upside as high as 3.75, which would probably finally signal that the pesky sellers in there have finally gone after the latest news. The buy signal here was the unfilled gap to the upside through the 50-day moving average. We got that late last month on the 28th, and it's been up and away ever since. In terms of the stop loss, hopefully there'll be no need for any consolidation back below 2.3 pence, which was the old July resistance. But above 2.7, looking for 3.7 on United Oil and Gas, perhaps as soon as the end of next month. Finishing off with a new name, at least for the recent past, we've got Velocity Composites, and here we've comprehensively broken post-March resistance around 20 pence. Above that, looking for 26 or 27, which is a January resistance line projection. We've already had the island reversal, bear trap island reversal at the beginning of last month, an unfilled gap to the upside through the 50-day moving average, and then a clean break of the 200-day moving average at 19.5. So the shares, I think, have done more than enough to garner our loyalty in terms of a potential move to the upside. That's it for me today. More updates tomorrow.